And thanks everyone for joining us today. We do know how valuable your time is, but we hope that you can find some things that are very important for you as you prepare for your customers coming in starting next week. And so we'll jump right into it. For IRS updates for tax year 2021. So the different things that we want to cover is, first of all, some important dates. We did this presentation back in November, but we do know at the start of the tax season, the ending date, as well as when extensions are going to be available, up to what dates. So we'll cover that. We'll cover the child tax credit and advanced child tax credit reconciliation. This is a big topic for this year. We'll talk about child and dependent care credits. We'll change this to the earned income tax credit. On top of that, we're going to cover the recovery rebate credit. We'll go ahead and cover changes to the premium tax credit. We'll also cover taxpayer authentication and other things that you're going to need to know. This presentation will take about 35-40 minutes, and then there will be time at the end if you have some questions. So we'll start with important dates. Note the following significant dates as announced by the IRS, and this just happened last week. I'm sure most, if not all of you already know this, but the tax season now officially starts for individual returns next Monday, the 24th. On top of that, on the 18th of April, that will be the last date to file without extensions. Please note that normally it's the 15th, but because of the Emancipation holiday, it is now the 18th. And finally, if you're asking for an extension, the due date to file for those requesting extension will now be on the 17th of October. And please note, as you all probably know already, that if you do owe money, you still have a responsibility to make payments, but that the extension date itself is now set as the 17th of October. Next up, we want to talk about the child tax credit and advanced child tax credit reconciliation. So with regard to the child tax credit, first of all, for 2021, it will be fully refundable. And on top of that, the credit amount is $3,000 per child and $3,600 for children that are under the age of 6. The eligible children are those under the age of 18, and it was previously 17. We also know these changes apply to all taxpayers who have their main home in the United States for more than half of 2021. And with regard to that, taxpayers whose main home was outside the United States for more than half the year, it will still hold true the rules that were in place last year. Continuing on with the child tax credit, there'll be 2 phase-outs that will apply. And what do we mean by phase-outs? The first phase-out will say that the credit is reduced to $2,000 for filers when their adjusted gross income reaches the following. For single, it will be $75,000. For married filing jointly, it'll be $150,000. And if you're head of household, it'll be $112,500. The second phase-out will look as follows. The remaining $2,000 credit will continue to be reduced based on the AGI, and then will reach 0 when your married filing jointly is at $400,000 or greater, and all other filers is at $200,000 or greater. So again, these are phasing out the tax credits that you get for child. Continuing on, the advanced payment of child tax credit was something that took place during the latter half of last year. Eligible taxpayers began receiving monthly payments equaling half of their total child tax credit distributed during the months of July through December. And that was something that was really a change since historically, it all became a part of the credit that you got as part of your tax return. So it was being paid as they go. And so what does that mean? The monthly payments were as follows. $250 for each child between the ages of 6 and 17, and $300 for each child that was under the age of 6. Important to note that the calculations for these advance payments were based on information from the taxpayer's 2020 or 2019 federal tax returns. Continuing on, there's a reconciliation that has to take place with regard to these advance payments. And how does that look? Well, all taxpayers who received an advance payment for the child tax credit will have to reconcile these payments with the calculated 2021 child tax credit. So they're going to have to reconcile or make amends for the amount that was paid during the year. This reconciliation is done on Schedule 8812. The 8812 is going to be a very important form for this upcoming year with regard to this. The results of the reconciliation will be one of 2 different things. First of all, there'll be a refundable credit. That means the calculated credit is still greater than the advance payments that were received, which means that they still have a credit that's coming, or an additional tax. And that will take place if the total of advance payments were greater than this calculated credit. The result can be found on that same 8812, page 3. Continuing on this, how will the taxpayers find out how much advanced child tax credit they received in 2021? This is going to be so important for you as a tax professional to make sure that your customers are bringing this information, or your clients bringing this information to you. The IRS will be mailing a letter 6419 in January, and these have started to go out, by the way, which will look like an information return or a 1099. And in the 6419, the letter will give taxpayers the amount of advanced child tax credit that they received in 2021. The letter will include the total amount received and the number of qualifying children used to calculate the advance payments that were made. If a taxpayer loses the letter, so in other words, they received it or they didn't even receive it, or for whatever reason, they'll still be able to access the needed information by logging into one of the following. First of all, they can go to the Child Tax Credit Update portal or their individual IRS online account, which will have a link to that same Child Tax Credit Update portal. Now, I'm going to say this on many occasions during this call, but it's so important for you to advise your tax-paying clients to go ahead and get themselves an IRS account set up. As you can see, there'll be instances where they need to get information, and they can do so easily by getting an account set up. Because in this particular instance, the child tax credit portals will find what was that they received. But again, that all can be set up by simply get their individual IRS account set up. Continuing on with regard to how they can find out how much advanced child tax credit they received, access to the aforementioned sites uses the new Secure Access Digital Identity, which we're going to talk about in greater detail a little bit later on. At the same time, if a taxpayer had previously used a secure access to authenticate themselves, they can use that login and password to access either the Child Tax Credit Update portal or their individual IRS account. So if they had set up an account last year and they still have that login and password, they can use that for this year. And we're going to talk more about the Secure Access Digital Identity process a little bit later in this call, but it is important for folks that have not been set up to do so if you can encourage them to do so. You should actively do this. Encourage your customers to go ahead and get themselves set up so that they get information that they need in case they have lost anything that was mailed to them by the IRS. Continuing on with the child tax credit and advanced child tax credit reconciliation, there is a safe harbor for excess advance payments. And this is going to be very important to note. There are going to be situations where people have received payments that they may not have coming to them. And I'll give you a perfect example of this. I'm sure many of you folks are going to be dealing with these types of situations. You might have had a divorced husband and wife, and one person gets credit for the child 1 year and the other person gets credit the next year. What's interesting about this whole thing is remember, the advanced child tax credits were being paid up based on the previous year's return. So there are going to be some situations in which somebody might be receiving a credit when in reality it was supposed to go to the other person, the credit itself. And so what's going to happen is that there's still going to be a safe harbor for excess advance payments. And what's the safe harbor going to look like? Taxpayers will not have to repay an overpayment of up to $2,000 per child if the following is true. If it's single, the AGI is below $40,000, and there'll be a phase out of this safe harbor occurring between $40,000 and $80,000. So what's going to mean is that if they made less than $40,000, they're going to be able to keep the advance payment even if they weren't the ones that were entitled to it. On top of that, if they were married filing jointly, the AGI is below $60,000, and the phase out of this safe harbor occurs between $60,000 and $120,000. It's very important to know because, again, there are going to be circumstances in which somebody's going to say, wait a minute, my ex got the credit for this year and it really is supposed to go to me. And just as a side note, if you are the person that's entitled to that credit and you didn't receive any of the advance payments, you can still check a box on line 14F of your 8812, which will claim, hey, I didn't get any kinds of payments this last year, and I'm the one that's eligible for them. The head of household for the AGI is below $50,000 with a phase out of the safe harbor occurring between $50,000 and $100,000. The revised Schedule 8812 that we were talking about just a moment, it's now used to calculate the child tax credit as well as other dependent care credit. And last year, this schedule was used only for the calculation of additional child tax credits. The new format of the Schedule 8812 is as follows. First of all, there's page 1, which calculates both the other dependent and preliminary child tax credit, as well as the new refundable credit that we were just speaking of. Page 2 will calculate the child tax credit and additional child tax credit for taxpayers whose main house was outside the United States for more than half a year. And page 3 will be used to calculate any amounts that the taxpayer has to pay back due to the total of the advanced child payments received being more than their calculated credit. Please note that in most instances, we're going to find that the people are going to be completing page 1. I don't know if you've had a chance to look at the software itself yet, but I'm going to go ahead and toggle in because we are actually literally at the 8812. And you'll notice here's your part 1, your part 1B, part 1C, part 2, and part 3. It's all part of the 8812 for this year. And as the things that I was talking about before, literally, if you take a look, and I'm sorry, I said, I believe, I said 14F, I believe it's 14E. Enter the aggregate amount of advanced child tax credit if you or your spouse received in 2021. If you did not receive any and you're entitled to it, this is the box in which you're going to check. Next up, we want to talk about the Child Independent Care Credit as calculated on the 2441. What you're going to find for this year is the numbers have really increased. It's fully refundable, first of all. Next up, for the tax year 2021, the amount of qualifying child tax care expenses has increased dramatically. $8,000 for one child, which was normally $3,000 before, with a maximum of $4,000, which was only $1,050 before. On top of that, $16,000 for 2 or more children, which was $6,000 before, with a maximum credit of $8,000 or 50%. The credit rate and income limits are increased as follows. First of all, 50% of expenses when the AGI is under $125,000. Credit rate gradually declines until it reaches 20% when the AGI reaches $183,000. After that, it's 20% rate that applies between $183,000 and $400,000. And then finally, the credit completely phases out at $438,000. Continuing on, for taxpayers who had their main home outside the United States for more than half of 2021, this credit is non-refundable. On top of that, more information can be found on this on the Child Independent Care Credit FAQ page that can be found on the IRS website. And please note that there's a new line form on the Form 1040, Schedule 3, Part 2, Line 13G to show that this credit is now refundable. Also on the Form 1040, Schedule 3, Part 1, Line 2, for the non-refundable credit still exists for those who had their main home outside the United States for more than half of 2021. Revisions to the 2441 are as follows. First of all, there's now going to be a checkbox that's been added at the top of the form regarding the qualifications for the credit being refundable. Because again, it's refundable for folks in the United States this year. And the box is going to read as following. For 2021, the credit for child and dependent care expenses are refundable if you or your spouse, if filing married, filing jointly, had a principal place of abode in the United States for more than half a year. The box can be found right on the top of the 2441. The checkbox is added to Part 2 to indicate that the taxpayer had more than 3 qualifying persons, and added new line 9B to enter for 2020 expenses paid in 2021. Finally, line 10 will now show the calculated credit if the credit is refundable. And line 11 will now show the calculated credit if the credit is non-refundable. So please note that these are changes to the 2441 as you're completing this for this past year. Next up, we want to talk about earned income tax credit. And there's some permanent changes that were made to the earned income tax credit, or EITC. First of all, disqualified investment income. The maximum amount of investment income allowed has been increased to $10,000. On top of that, taxpayers with no children without Social Security numbers will be eligible for EITC without children. Additional changes to the EITC for 2021 only, the prior earned income election. Taxpayers may elect to use their 2019 earned income for calculating EITC if their 2019 earned income was more than their 2021 earned income. Obviously, this is in place to help people out who might not have been working during the pandemic. On top of that, the criteria for individuals wanting to qualify for no children changed somewhat. First of all, minimum age has been lowered to 19. The minimum age to qualify for specified students is 24, 18 for former foster youth or qualified homeless youth. The maximum age has been eliminated. Taxpayers over 65 can now qualify, which was not the case before. The maximum credit is $1,502, and the credit is fully phased out at around $21,000. Next up, we want to talk about the recovery rebate credit. Now, the refundable credit for taxpayers that did not receive their full EIP in 2021. You remember, there was a payment that was made in 2020 and then one that was made in the April timeframe of 2021. The amount credited is as follows. $1,400 for each eligible individual. It was $2,800 for married couples that were both eligible. $1,400 for each dependent claimed on the 2021 federal tax return. In 2020, it was only children under the age of 17, and each dependent must have a valid Social Security number. ITINs themselves are not allowed. With regard to that, other things to note, there was a phase out of credit when the AGI reached the following. $75,000 for single filers, which was reduced to zero when the AGI reached $80,000. So in other words, you were eligible for $1,400, but then that began being reduced, starting at $75,000. $150,000 for married filing jointly, and that was reduced to zero when the AGI reached $160,000, and $112,500 for head of household filers, which was reduced to zero when the adjusted gross income reached $120,000. Taxpayers in the following circumstances will have a refundable credit for their 2021 return. First of all, taxpayer and their spouse, if applicable, did not receive any economic stimulus payment. Again, if applicable, if they were eligible, or economic stimulus payment was limited based on their income in 2019 or 2020, or the taxpayer simply did not receive the payment for their eligible dependents. In those particular instances, there's going to be a refundable credit on their 2021 return. Continuing on this, the reconciliation on the 2021 federal return, any reconciliation pertaining to this EIP that was received in the March-April timeframe of 2021 must be done showing the calculated credit owed to the taxpayer. And guess what? Since most taxpayers received their full EIP amount in March and April, the recovery rebate credit should generally be calculated at zero. That being said, how will taxpayers know whether or not they received that stimulus payment in 2021? The IRS will be mailing a different letter. This time it's going to be the letter 6475, and that too will be done in January to all taxpayers that received an EIP in 2021. This letter will look a lot like an information return, just like the 6419 we were talking about before, and will have the taxpayer the total amount of the EIP that was received in 2020. If and when the taxpayer loses this letter, if this is to occur, one of the important things, they will still have access to the information by logging into their IRS online account. So again, this is another perfect example of why you want to encourage your tax-paying clients to go ahead and get themselves accounts so they can get the needed information that they can provide for you. Changes to the premium tax credit. Next up, for 2021, taxpayers who purchased their health insurance by way of the exchange may see an increase in their premium tax credit, which is great news. The amount an individual must contribute towards paying their health insurance premiums based on the benchmark silver plan has been reduced for every income level, with the maximum percentage now ranging from 0 to 8.5%. The credit is also extended to individuals with household income greater than 400% of the federal poverty level by implying an applicable maximum percentage of 8.5% of their annual household income that they must contribute towards their health insurance premiums. This is for taxpayers who purchased their health insurance, of course, by way of the exchange. Now, for 2021, individuals who received unemployment compensation will be deemed to have met the premium tax credit income eligibility criteria by disregarding the household income above 133% of the federal poverty level. The question was added to Form 8962 for the taxpayers in this particular situation. So what does this mean? Guess what? There are going to be more people that are going to be eligible for this credit based on whether they're making purchases of health insurance. Okay. The maximum contribution percentages by household for the premium tax credit are as follows. Now I'm going to go ahead and show this. I'm not going to go ahead and read through each one of these entries on this graph, but I'm going to go ahead and hold it up for just a moment here, or show it for just a moment. So if you want to take a screenshot, you can. Please note the following: the income of percent of federal poverty level, and then of course the maximum percentage of the income maxing out at 8.5%. Okay, let's go ahead and move on then. The next thing we want to talk about is taxpayer authentication. And this is huge. We were talking about this before, especially since you want to encourage your tax-paying clients to go ahead and get accounts set up with the IRS. And how that's going to be done now is through what's known as a Secure Access Digital Identity, or SADI. So this will replace the secure access that was in place before for authentication into an individual online account. And have access to other IRS online tools. How it works. First of all, the user goes to the Tools and Applications section of IRS.gov and opens the Child Tax Credit portal or view your account information. I believe it's easier to kind of view your account and go ahead and start up a new account if you haven't done so. The user will be able to open a secure account by way of ID Me, and that's where they're going to go ahead and create the account. If you see it, there's going to be a spot that says ID Me, and that's where you're going to go ahead and start the process to going ahead and getting an account set up with the IRS. The user will complete ID proofing or authentication as part of the registration process, and the user then go back to the Child Tax Credit Update portal or individual online account. And after that, access will always be done through this ID Me. Continuing on, because this is so important, individuals will need to follow in order to complete the new IRS authentication process. As a tax professional, if you're encouraging your people to sign up and get an account with the IRS, you will need to make sure that they know what's required. The following: they're going to need a picture ID, a driver's license, passport, and so on. On top of that, a cell phone with the ability to take a photo and upload capabilities. And that's going to be important that you make sure that they understand that. Another piece of evidence to prove who they are. This could be a car registration, bank statement, utility bill, so on and so forth. And please note, depending on that evidence type, individuals may need to provide multiple forms. They may need to only provide one. I can't tell you exactly what the IRS is going to look for, but do note that, you know what, depending on what their additional piece of identification is, they may have to provide multiple ones. And they're going to have to be able to provide an email address. What's going to happen next? Individuals will then take their picture with their cell phone as further proof of who they say they are when they're creating their account. And for this initial rollout, please note, which we talked about earlier in this presentation, individuals who already had an account set up through secure access, which was the former system, they'll still be able to use that login and password information to access their tool. So people that had accounts last year, they can still use their same login and password, but we're encouraging more and more people to go ahead and get accounts set up, okay? An example real quickly of what's available by initiating this IRS account. This is just a perfect example of why you will want to encourage people to do that. They can, from their IRS account, go to the IRS Child Tax Credit portal, which we talked about before. And in that portal, they can do the following things. They can opt out of receiving advance payments if they wanted to. They can re-enroll if they opted out earlier. They can change or add bank account information or change their address. They can see history of payments, amounts of each payment, how many payments were made or distributed, or whether 2020 or 2019 tax return information was used to calculate their advance payments, and even make changes to the income, marital status, and or number of qualifying children. All these types of things are available by setting up an account, first with the IRS, and then from there being able to go, in this particular instance, to the IRS Child Tax Credit portal. It's so important because, again, number one, first and foremost, is that if they lose a document that's been sent to them by the IRS, they're going to be able to get copies of it through getting an account with the IRS. Next up, we want to talk about some other things to know. And when we're talking about other things to know, we're going to start with Form 1040X. Something very interesting for this year, beginning with this filing season, the following amended returns can be electronically filed for the first time. If the original return was paper filed, and if the taxpayer or taxpayers are making a filing status change. In those particular instances, the 1040X can now be electronically filed. Please note, any refund associated with these amended returns will still come to the taxpayer by way of a check. The direct deposit option is not allowed on amended returns, and we are looking, or the IRS is looking at potentially changing this for tax year 2022. But right now, at least the idea that off the 1040X in these particular circumstances, you can go ahead and electronically file is already a nice change. Please note that it's still going to be a paper check that's going to be mailed if there's an amendment that means that somebody has money coming, okay? Other things to know with regard to COVID-19 or disaster-related withdrawal from a retirement account. This was really, really interesting. In 2020, taxpayers, and by the way, this has been the case in other disasters as well, but in 2020, taxpayers have the option of making a withdrawal from their retirement account if it was related to COVID-19 or another federally declared disaster, as I just said a moment ago. In these instances, the withdrawal was not just subject to penalty, and the taxpayer could elect to have the amount withdrawn taxed over 3 years instead of having it hit on one. The election was done by completing Form 8915E on the 2020 tax return, which in turn taxed a third of the withdrawal. Now, for 2021, and by the way, for 2022 as well, the withdrawal will be taxed by completing Form 8915F. So instead of on the E, it's now going to be on the F, and it will be that for this year as well as for next year. Note, to find out the amount that is being taxed each of these 3 years, refer to the 2020 return, Form 89E, and you can see that either on line 9 or on line 17. So going back and taking a look, if they did take this early withdrawal and they're going to be taxed on it, one of the things is you can find out what that amount was by looking at the old 8915E, line 9 or 17 from the previous tax return. Self-employed credit for sick and family leave. This is another important one. May not be relevant in many instances, but there will be some people that are making this claim. That's off the 7202. The American Rescue Plan Act was made the following changes for credit in 2021. First of all, they extended the credit through the 30th of September 2021, and they reset the 10-day maximum for sick leave starting on 4/1. The original 10-day limit applied between 4/1 of 2020 and 3/31 of 2021, and they increased the number of days the family leave credit may be claimed to 60, which means the maximum credit is $12,000. Now, what does this all mean? It means that there are actually 2 different places within the 7202 that we'll be completing if you're making a claim before the beginning of April and between April and September, okay? Revisiting the general details of the credit, it's a sick leave, and self-employed individuals may claim up to 10 days of sick leave if they were unable to perform their services due to COVID-19 or the individual is caring for an individual because of COVID-19 related reasons. On top of that, the credit amount for themselves was $511 a day, or when they were caring for someone else, it was $200 a day. Please note, with regard to the family leave, self-employed individuals may claim up to 60 days if they were unable to perform their services because of certain COVID-related care they provided for a son or daughter under the age of 18 whose school or place of care was closed for reasons related to COVID-19. And the credit amount, as I had said before, will be $200 a day if it's caring for somebody else. Changes to the Form 1040, we'll finish up with these. First of all, move charitable contributions for non-itemizers from line 12B, and it was on line 10B in 2020. Change the wording on line 19 for non-refundable child tax credit and credit for other dependents. In the vast majority of cases, this line will only show credit for the other dependents, and the only time it will include the non-refundable child tax credit is when the main home was outside the United States for more than half the year. Also note that it added lines for the non-taxable combat pay election of prior year, 2019, and earned income to earned income tax section, which can be found on line 27. Also added a checkbox to the earned income tax credit section for taxpayers that did not reach age 19 before December 31st of 2021, but satisfied all other requirements for claiming EITC. And finally, change the wording for the refundable child tax credit on line 28. Other changes that were made to the 1040 are as follows. There are new lines on the Form 1040 Schedule 1, and I'm not going to go through these, but I will show them real quickly. First of all, added separate lines, as you can see right here, 2A through 2P, added separate lines 24A through 24K, and you can see when these are applicable. Next up, new lines that can be found on Form 1040 Schedule 2, and there are going to be 3 different schedules associated with the 1040 now. As you can see, we created different lines and different forms that would tie to the things that are associated with Schedule 2. I'll go ahead and give you a moment if you'd like to read through this. I don't want to read this line by line. And finally, what we're going to do is look at what's new on the on the Schedule 3 associated with 1040. That was adding separate lines 6A through 6I. You'll see that added separate lines 13A through 13H, and added line 13G for refundable child and dependent care credits. That's one of the ones that we noted earlier in our presentation. Now, those are the changes that are to the forms themselves. We've covered a lot in this particular presentation, everything from earned income tax credits to child tax credits. We wanted to make sure that we were covering things having to do with premium tax credits, and even went into things, some of the things that you can see a little bit less often. We finished up by making sure that you understood the importance of getting accounts set up for your tax-paying clients, and we encourage you to do that as often as possible because so much information is available that you as a tax professional are going to need. That brings me to the end of what we wanted to present.